The Chinese yuan plunged beyond 7 per dollar for the first time in more than a decade. This after the central bank set daily currency fixing levels weaker than 6.9 for the first time, seen as a reaction to US tariff moves. Well, the dollar generally by and large has been strong, and the Indian rupee too has seen some collateral damage today, I reckon. It slipped below the 70 to the dollar mark. Joining us now to talk about this is K. Hari of First Rand Bank. Hari, good having you. Thanks so much for joining in. Good morning, Neeraj here. 70.55 as we speak. What do you expect the near term to throw up?
Good morning, Neeraj. Yeah, clearly, I think the fact that the US-China trade talks aren't ending anywhere near a resolution process, and the fact that Trump has indeed put the duties on the Chinese goods, and that China has said that it's ready to retaliate, I think that's clearly made sure that everybody believes that now a resolution doesn't seem to be coming up in a hurry. And today what the Bank of China did is again a confirmation that the trade talks are not going anywhere, and the Chinese exporters are going to get as much of a leg up as possible by a weakening Chinese currency. So 707 to the yuan, I think clearly has set the tone for all other related currencies like the Indian rupee to also sink in sympathy. So what you saw in the dollar rupee is only partly reflective of the fact that the FIs have been exiting the country, and they showed a net minus in July and a net minus in August so far. That's, of course, one of the factors, and it has its own reasons, which led to that. But clearly the fact that Indian exporters need a leg up, and therefore a weakening rupee is seen as a positive to give at least a relative parity to the Indian exporters compared to the Chinese exporters. So the rupee going to the 70, 40, 50 level, I think is clearly a reflection of the Chinese currency level and not necessarily India specific. And for the same reason, I believe that we are not the target. China is the target, and therefore Chinese exports are going to face quantitative hurdles. We are not yet in that kind of category. So can we directionally move the same way as the yuan? The answer is yes. Should we necessarily move the same extent? Probably not, because we are not in that space. So probably at some level, between 25 to 71, it's a very broad range. It's now, in fact, pausing at 70-50 level. If people think about this with a cooler mind, I think the exporters should start selling their receivables slowly in a SIP format and take advantage of the high premiums and book their receivables.
I reckon you seem to be suggesting as well that this might not be all that bad for exporters, which is that one fundamental view. But just if indeed, Hari, if this war and the movement on the dollar strength, etc., and all of that might continue, do you reckon there is a higher probability of we staying between this 70.50 and 71, or could there be a course correction because, well, crude is also strengthening, crude is also weakening?
No, unfortunately, given the overall situation that is there, which is the local political development that we might see today evening, and also the fact that the FIs are in a very general exit mode, and as now everybody is clearly saying that this is not just linked to the super tax, it is also linked to the fact that the corporate earnings are looking very low. It also links back to the valuation game here. So in that kind of a backdrop, the FIs exit are going to happen, and the trade deficit has come down from the $18-19 billion per month level, but has now become a more normal at about $14 billion. So in that kind of a space, the rupee is going to have a weaker tinge. Now, will it go back below 70? Unlikely, so long as the Chinese currency remains above 7. So probably 70 will be a new support, and as we spoke, it will be seen as a positive one and not a negative one, which would have been the earlier assumptions had the rupee just fallen and no other currency had fallen. But now it will be seen in a positive vein. But the rupee also can't become too weak because, A, you have inflation getting imported via crude, etc. And also a whole lot of our export basket has a large quantum of import content, whether it's crude exports, whether it's gold exports. So you don't really benefit too much by a weakening currency, excepting for those which have no import content or very low import content. So I expect the rupee to trade in a range of 70-71, and I don't expect the trade war between the US and China to get resolved in a hurry. So probably this is, as you mentioned, the new normal, 70-71.
Hari, thanks so much for joining us on that short notice. Really appreciate your time. Well, that's K. Hari of First Rand Bank, important voice. Calming the nerves, yes, but it's clearly worrying. And by the way, just before I get to the next conversation, because he spoke about earnings performance. Look at the equity markets. The bank Nifty is now down nearly 3%. 1.75 or thereabouts for the Sensex, 1.74 for the Nifty. It's looking very, very ominous right now. Friday has long been forgot. But talking of earnings, we have to do that. Couple of earnings conversations. Astral Poly firstly. Overall increase in cost hurt the company's operational performance in Q1. In terms of segmental performance, Adhesives disappointed. To help us understand the impact of the slowdown and more, and talk about the quarters ahead, the CFO, Hiranand Savlani, joins us right now on the show. Mr. Savlani, good having you. Thanks so much for joining in. How has the quarter been for you? I'll get to the nitty-gritties and the operational bit in a moment, but from how things have they gone as you expected them at the start of the quarter?
So actually when we started the quarter, last quarter also I given you the interview, that time we were not expecting that kind of great quarter, but once the time came and the situation improved and the volume started jumping in. So actually speaking, the quarter is better than what we planned.
Could you elaborate a bit further on this? I mean, can we see some pressures on the adhesives business? I mean, you spoke about how that is looking as well. And you know, when you say that you've been better than what you thought, are you talking about the top line performance or are you talking about something else?
So like in piping sector, we projected 15% plus kind of volume growth. But if you see the actual number, the growth is 28% in volume. So that was a much ahead of what we planned originally. As far as this adhesive business is concerned, we have already given earlier the guidance that company is doing a structural correction. Right now we are working on a 3-tier structure. The top of the tier is stockist, second level distributor, and then the dealer. So now company is moving into the 2-tier structure, directly to the distributor and then to the dealer. So we are removing the one layer from the structure. That's why it looks the number is low, but actually at the end use level, I don't think any problem is there. Secondly, there was a price drop in across all the raw materials and chemicals. So because of that, we have to drop the price of the final product. So that's why value growth is not that, but there is a reasonably good volume growth into the adhesive business also. So actually there is no slowdown even in the adhesive also.
While there is a broader uptick in low-cost housing due to government schemes, but new construction by and large has come off due to the general slowdown, and that's impacted interior work as well. How is it that you've managed to do what you've done on the volume front on the adhesives business? Is this the GST and the shift from unorganized to organized that is helping, or is it something else?
So two things has helped us in the growth. One is that our major focus into the adhesive business is retail. We are not much into the project side. Secondly, what you rightly said, that there is a shift taking place from the unorganized to organized side because of the GST. So if you see all the organized players, whether it is the adhesive, whether it is the piping, all are growing. So all the branded players, even in this environment, is still growing at a faster rate.
Can you provide some color on what led to the piping business growth, and looking at the volume growth in Q1, how confident are you for Q2 if not for the second half?
So like Q2, it is too early to comment on that. If you ask the July numbers are even better than what we have delivered in the Q1. So as far as till July number, it's going perfectly all right. Much more than what we have planned. So I don't see any problem in the Q2 numbers. But situation of the market, we have to see how it is going to shape up in the coming month. Based on that, it will be decided how the quarter is going to perform. But I can say with the high confidence that till July, the numbers are much beyond our expectations.
Okay, would that mean that operationally too, the numbers in Q2 would look better? As I believe higher wage costs impacted the operational performance for both the segments in Q1.
See, wage will always be higher, because if you see the history of the company, the Q1 contribute roughly about 18% of the top line, versus Q4 contribute around 32% of the top line. So because of that, on a lower wage, because of the seasonality, the wage cost will be higher. Secondly, we have appointed sizable peoples into the adhesive because we are coming up with a lot of new products, and we already launched into the construction chemical, white glue and all. So actually that number will be reflected in the coming quarters once we will be coming out from the 3-tier structure. So because of that also wage bill is higher. But when the quarter will progress, then the volume will further pick up. So that will reduce the percentage wage cost in the coming quarter.
Is it safe to presume that if the performance continues, then the operational margins will be better in the quarters ahead than in quarter one?
It looks like that it should be a little bit better than what we have delivered in quarter one. But because the operational efficiency will come in the coming quarter, normally the first half of the business is 42 to 43%, and the second half is 57%. So that way, if you see the percentage term, you feel that EBITDA is little bit lower. But once the moment we will go to the second half, it will jump, because then the operational efficiency will come back. So I don't think on a yearly basis there will be any problem into the operational number. Even Q1 also 15.5%, 16% EBITDA is a great EBITDA looking to the circumstances on the ground.
Okay. Any price hikes possible, or would you believe that because of lower capacity utilization levels, the prices would stay stable?
So you are right, because brand has always pricing power, so that everybody will take the advantage out of that. But on the ground, the situation is not still that great, and everybody is sitting with the capacity. Like today, even after doing 28% volume, my capacity utilization is hardly 62, 63%. So still we are sitting on a huge capacity which is idle. So first we will always try to improve the capacity utilization rather than jumping into the margin improvement. Margin improvement will definitely come with the operational efficiency. Once the new coming quarter where the volume will increase, the margin will automatically come back. But we are not in a rush to improve our margin. We will always be interested first to improve our volumes.
Okay, and brokerages have highlighted that the consistently high capex has resulted in lower return ratios for the company. If your capacity utilization levels are 60 to 62%, am I to assume that FY20 will be a year of minimum capex and might allow you to allow for your return ratios to improve?
So like in our earlier con call and even in our analyst meet also, we have explained everything in detail that still Astral is in a capex mode because we are increasing the geographical pressure. Like we were only in the west and south, then we last year added the plant in north, and now we are going into the east. Once this east plant will be operational, then we will be covering the entire pan India, and after that there is no capex because utilization is hardly 60-62% as of today. So I am quite confident that the capex cycle is going to end by the year end. So FY21 onward, you will be see sizable drop into the capex cycle, and that definitely going to improve the returns substantial from here on. So I don't see any problem into that, and capex cycle is more or less is going to end this year. But yes, the way volumes are coming now, suppose on a full year basis, if we deliver 25% plus kind of volume, then again the small capex may come in the next year also. But that is related to the growth. So I don't see that the return will not improve. It will improve substantially from the next year onward. Even in adhesive also, our capacity utilization is just 37%. So we have all completed all the capex into adhesive also. The moment volume will start picking up into the adhesive business also, the return ratio will improve much higher than what you are seeing today.
Okay, we wish you all the best for that, Mr. Savlani. Thanks so much for taking the time out speaking to us. It's Astral Poly, and you can see how the market is appreciating maybe some set of numbers which are okay because the stock is hardly correcting on a day when the Nifty is down about 1.5%. But at a time when then, this NBFCs are facing multiple headwinds, LIC Housing Finance is one company that's seen an uptick in net interest income and net profit numbers. Joining us now to talk more about these numbers and how that's been achieved is the company's MD and CEO Siddharth Mohanty. Shefali Malik, my colleague Johnson, to take the conversation forward. Shefali.
I spoke to Mr. Mohanty and asked him about how did the quarter pan out. So Mr. Mohanty is here with us. Mr. Mohanty, so how did the first quarter pan out for you? Did the slowdown that we are witnessing hit your numbers in the first quarter?
Actually, I will not attribute that. We have fared well. If you see our revenue from operation, that has grown by 19%. Loan portfolio also has grown by 16%. Retail housing loan also has gone up by 12.4%. So all this growth is there. But since you are telling there was some problem in our NPA, NPA has gone up by 0.44%, and we have made a provisioning for that. So had there been no provisioning, you would have seen much better result. So we have provided, but despite that, I feel this is a good result.
So you mentioned the rise in the NPAs. What is stressing the same? Is it the stress in the developer book, which is slowly becoming a concern now since a couple of quarters?
No, actually, for our company, it is some 2-3 accounts. 2-3 accounts. So those were up to March, they were good, but somehow they have gone on to NPA. But we are hopeful there is a total security is there, and projects are almost complete. But somehow they are not able to sell all the apartments so that they could pay. But that they have not been able to do. But otherwise, only this is 2-3 accounts have impacted. It is not large NPA or there is no pattern, because our recovery mechanism is very effective. We monitor each account. There is a task force, and our total focus is on asset quality. So that's why it has been hit, and first quarter there is little affected.
Sir, how much were the recoveries in the quarter, and these 2 to 3 corporate slippages that you just spoke about, what is the roadmap for them? Any recovery timeline that we can factor in for the same?
You see, this quarter, first Q1, whatever NPA was there, Q4 of last year, we recovered some 377 crore. NPA was reduced by 377 crore. But some new NPA, as I told you, 2-3 accounts, they added. And if you see, our project construction portfolio in the current year, disbursement is less by 60 crore. Earlier, compared to this quarter, we gave 889 crore. But this year, we have disbursed 829 crore. So there is conscious effort to give only quality project loan. So consciously we want to avoid bad project or projects which will not repay in time, projects which are not marketable, and the focus is on totally affordable housing and the projects which cater to affordable housing. So we have focused 2 areas. One is totally affordable housing PMY, and of course a project which cater to this segment.
Sir, how much were your disbursements in the quarter, and going forward as well for the full year, how much would you be targeting at?
Fresh disbursement 10,000 crore plus. Current year 10,261 crore we have disbursed, as against 9,594 crore last year for this period.
Sir, for the full year for FY20, how much can we expect you to disburse considering the slowdown? Would there be a conscious attempt to go slow in this year?
Full year our target we have kept 55,000 crore for the current year total target, and I think we will surpass that.
All right, Mr. Mohanty, thank you so much for joining us. And with that, it's a wrap on today's Indian Open. Up next is the FNO show.